Voice of FinTech.
Welcome to Voice of FinTech, a podcast mapping out the Swiss and global fintech scene, connecting fintech enthusiasts with startups, incubators, accelerators, business angels and VCs, and incumbents interested in partnerships. Voice of FinTech will help you navigate the fintech ecosystem. Here you can listen to the startup founder stories, what investors and incumbents are looking for when dealing with startups, and find out more about resources provided by incubators and accelerators.
This is FinTech 2022 success stories. It's with Rudolf Falat and David Yakobovitch, and I will drop down to the bottom and leave it up both to you and any other information you guys want to introduce.
Brilliant. Thank you very much, Rachel, for the kind introduction. David and I will talk about what we call FinTech 22 success stories, a critical view by us. We are both hosts of Voice of FinTech podcast. I'm based in Zurich in Switzerland. David's based in New York. I'll let him introduce himself. And I spent a lot of time working in the US and UK, Switzerland now in finance, financial services. And I've been mentoring, advising, and investing in startups the last couple of years. And I started a Voice of FinTech podcast. So what we do in the podcast, we talk to founders, investors, ecosystem hub leaders, and corporate innovators. And the last group that doesn't really belong anywhere that we cover are thought leaders. Around the world, we also have hosts based in Asia, in Africa, and in LATAM. And this has been going on for more than two and a half years, so since June 2019. And we do live events as well, sometimes using the video, sometimes the audio. And we love Fishbowl because the crowd here is very professional. We see that people are quite experienced as well, knowledgeable about the topics. So if you, during the chat today, you have some questions that you want to ask us, you can send us a message on Fishbowl. We will do our best to check it and answer it live, or you can raise your hand, we can let you speak. Remember that we will be recording this because we'd like to release it as a podcast episode as well in the next couple of days for the people who couldn't join us today. So David, why don't you say something about yourself to the people who haven't heard you perhaps before, even though this is probably a smaller and smaller crowd every time we do this, hopefully.
Thanks, Rudy. Really appreciate it. And hello, everyone. Great to join you. Good morning, good afternoon, good evening from New York City, where we're having a delicious, blistering 21-degree Fahrenheit, and our snowy, cold winter bomb is going to be happening this weekend. So enjoying the weather, a little different than Puerto Rico, where I was just in the last week, enjoying some vacay and meeting some of the crypto island folks. So excited to be here, talk about all things fintech and maybe crypto.
All right. Well, wonderful. Always jealous about your travel because I travel as well a little bit, but not as much. And we're going to talk about metaverse, where you can easily travel from your chair to another country if you like. But before we get there, I wanted to kick off by how we're going to approach it. And we look at the news from the last month or so and try to find the themes that could be interesting for fintech. And we take fintech as broadly as possible. So fintech is not just a payment app or a Forex transfer app or something like this. But frankly, I agree with comment of one of the VC investors in this space who says in the future, every company will be a fintech. I would say maybe except for life sciences, but other than that, everything can be seen as a fintech company. So today, what we'd like to talk about is broadly 4 big themes or topics. First one is gaming and fintech or metaverse, XI, which is explainable AI, and then recent crypto crash and potential end of InsurTech revolution. Let's see. So let's start talking about one of the biggest deals of the year so far, or last 12 months. It's the deal that Microsoft announced buying an Activision, so going into gaming space more than ever. Of course, you probably know Microsoft also owns Xbox, but now they've decided to go big time after the games publisher as well. Activision is a company that is behind the Call of Duty that you can find on PlayStation or other platforms, World of Warcraft or Candy Crush on your mobile. And maybe some of you play that or your kids play that. Either way, we're going to talk about the demographics of gamers as well. But what happened is that this is of course, just an announcement. It's signed, but not closed yet. And that's actually a big question mark. It can take maybe even up to 18 months to go through all the regulatory approvals to get the deal done. But this is a $68 billion acquisition that Microsoft is going to do. Now, on the news, their biggest competitor, Sony, behind the PlayStation, their share price dropped by 13% on the worries that it might be just outflanked. But frankly, it rebounded within 24 hours. Similarly, as the other publishers of games, share gains were wiped out in 24 hours. So I would pause here and see, what do you think, David, about, well, first of all, strategically about this move of Microsoft? And second, what about these market reactions? Like the traders will sell off the Sony, and then in 24 hours, we are back where we were.
I think about all the games in the market, right? And we think back even to the last few years and remember that Roblox has gone through so much, right? With their own acquisitions and being in that space as well. And I believe Microsoft's had a lot of interest as well with Roblox, right? And there's been a lot of companies out there that we're seeing these acquisitions. And it's interesting, right? You look at even before Roblox, like Minecraft, Minecraft was bought from Microsoft for $2.5 billion. Roblox is still, I think, on the market. But it's so fascinating to see how, as a result of living in a life that's been all online the last couple of years, everything takes on a movement so quick of its own. As you said, playing Candy Crush, playing Call of Duty, it can happen in real time and you can connect with everyone. And that's why, right now the world's going through its newest fad of gaming, Wordle. I don't know about you. Are you playing Wordle, Rudy? It's been going viral in New York and LA recently.
No, but I will after this. So thank you for taking a bigger dent in my time, but great stuff, no problem. So I will look into this.
I will not tell you the Wordle of the day, but look forward to you getting involved there.
Oh, brilliant. So I saw a quote here from Neil Kapling, he's a tech analyst in Mirobot Security, saying that 15 years ago, we had around 200 million gamers around the world, and now you've got around 2.7 billion, or Microsoft says 3 billion, right? So unbelievable numbers. Obviously, this was helped by the pandemic, but it looks like it's here to stay. And but let's double down on this. 13% dent in the Sony share price. I mean, was this an overreaction? Are the traders now too nervous, or what's going on? I think this is a little bit too much. Speaking as a Sony fan.
I think when we're looking at different platforms, right, like Sony and Microsoft and Apple and Nintendo, I think the change in market share going on right now, it's a little too soon to know, because we've seen a lot of these mini movements of the volatility of stock price happen in the last decade. So I'm not one to say yet what is occurring in the market. I think there's some nerves. I think there's some liquidity. There's some movement of capital. It's too soon to tell if it's a Sony item, if it's a market item, or certain industry.
Well, I mean, they recovered, and as I said, the game publishers' shares actually dropped back again after a couple of days, within 24 hours. So interesting. The other thing is what the journalists and the media and the analysts were trying to figure out: what is this about, right? The Microsoft is saying this is about metaverse. Some people say, well, this is just a continuation of console games, even though some people say, well, in next couple of generations, we'll get rid of consoles and we'll have such good computers, nobody will need the console ever. Let's see. Apparently, Google and Amazon tried to create their own game studios. It didn't really work out. So Microsoft and Sony are the leaders now, subject to the approvals of regulators that the deal will close between Microsoft and Activision. And then, of course, the eyes are on the one of the other game publishers. The biggest one left out there is EA. So let's see what happens there. Now, what does that mean for fintech? And what does that mean for finance? Because first of all, a lot of people think games are only for young people. Apparently, there's research out there that out of that nearly 3 billion people or gamers worldwide, in the United States, an estimated 64% of adults are gamers. So of course, they probably will be a bit younger than maybe people who go to live classical music and things like that, where there is another issue with the demographics, and the concert halls before pandemic were trying to find solutions how to be more attractive for younger audience. But in any case, it's not just for young people. The gaming is for everyone. And what does that mean? I wanted to quote a couple of examples here related to fintech, which I think are pretty cool. I would like to reach out to Gabby Dizon from the Philippines, who started a video card game called Axie in 2018. And in this card, you have to pay to play, and he saw that some Filipinos couldn't afford it, so he lent them his Axis, his cards, so players could play, and they would pay him back from their returns, right? So it's kind of like really creating a mini bank or investment bank within that other virtual environment or a game, which is I think pretty cool. Now, of course, the metaverse predates crypto and virtual reality. There is some research out there, maybe about the San Francisco startup called Linden Lab, which introduced Second Life. I don't know if David, you know it, but again, as the name suggests, it's a platform which lets you interact in the form of digital avatars, and there is no built-in conflict or drama or fight. It's just really a second life. Now, of course, with the blockchain coming into play and the NFTs, there are many blockchain companies creating decentralized versions of Second Life. And you can not only interact with avatars, but also with NFTs, and you can trade with those. So how cool would that be? But maybe one other example or an issue in this space is that, look, who is running things here? What is the governance, right? And there are some companies who are creating player-owned protocols, even though, this is another buzzword and it's decentralized organizations. And apparently, of course, as it happens with the early stage innovation, there are also cases when the things don't work out. So one of those examples is Constitution DAO that hasn't worked out. Apparently, the group raised around 50 million in Ether to buy an original copy of the US Constitution, but when it lost its bid, the DAO software wasn't able to return the money to its members. So I'll just pause here. David, do you have any examples or views or comments on creating financial transactions within the game environment? Of course, you can talk about Roblox as well, right? How creators there can create avatars and get paid for this. That's one thing. All kinds of other things. So, where do you see the biggest progress being made in this space?
Yeah, so thinking about the different ideas that you presented, from Axie Infinity to Constitution DAO to others in the gaming space, I wanted to highlight those two, and then one that I think presents a lot of opportunity. So first, Axie Infinity. Look, Axie Infinity has been known on the space as being exciting because of creating financial liquidity for different populations that don't traditionally have the same levels of income as you would see in other countries. Namely the Philippines. And the issue with Axie Infinity is that the market has completely collapsed and imploded on itself, as much as happened in the NFTs market. So Axie Infinity's price, once as high as almost $160 per token, is now hovering under 60. And the Smooth Love Potion, which is what was traded in the game that a lot of players played with, once as high as like 35 cents a share, now down to 1 cent a share. So it's no longer sustainable to actually play to live in the game. But it does beg the question, are there games where people can make a living? We know prior to the pandemic how Fortnite became all the rage, and there are games where players do successfully work and live. So that's something to emerge and to see. And I think there's a lot of opportunity there. Now let's hold that thought on Web3 gaming. So we're going to come back to that after I share some thoughts on Constitution DAO. So Constitution DAO, brilliant idea, right? I actually have a friend who bidded in on it as well. He's part of the whole collective. We're going to win a copy of the Constitution. Little do we know that a hedge fund quant manager is going to buy it for $50 million approximately and displace us. So there's the opportunity that you don't win a bid, right? It's the same thing if you go to the floor auction house at Christie's or Sotheby's and you bid for a Picasso, right? You may not win that artwork. I think the challenge becomes what happens with the gas fees and the assets that you lock up. You should get it back. Where is the accountability? Where is the governance? Hello, this is a DAO. It promises to have better governance and legal structures that are decentralized. So I think we're still going to have to see how that's going to unfold in the coming months, for sure.
Yeah, that must have been disappointing. But look, let's stay optimistic. Of course, these are hopefully just early stage development issues, and we'll sort it out. The concepts are I think, are great, but the execution is another thing. Now, as I mentioned before, we are hosts of Voice of FinTech, so we will use this as a recording as well. And there in the show notes, I'll post the links to the articles where you can read a little bit more about what we talk about here. So, for example, Goldman Sachs also produced an interesting report called Framing the Future of Web 3.0 Metaverse Edition. And there, I think there were some great examples of how you can actually, within the game, maybe not make a living, where this is where Sony or Roblox make a living, but you as a gamer, if you have money to spare, you can spend money on all kinds of things, like, for example, going to a casino within Grand Theft Auto, where you can gamble real money. So that's a Take-Two's game. Take-Two also acquired Zynga recently. Zynga was also involved in lots of acquisitions in the last 12 months itself. So it looks like there's been some consolidation going on in the publishing space, plus the big tech also. And it's not only about gaming, it's probably, you can see it as a door towards metaverse, and metaverse meaning an overlay between the real world and the online world. Now, not everybody is necessarily a clear fan. For example, the CEO of Niantic, the company that is behind Pokemon Go, says that a lot of people are talking about the metaverse these days. And coming off 18 months of Zoom, Netflix, and DoorDash, you can count me out, or at least in the form that most folks are imagining it. And of course, you can see the dystopian concept in a movie or a book by Ernest Cline, Ready Player One, where everybody has abandoned reality for an elaborate VR multiplayer game. So hopefully that's not where we headed, but there are some tremendous exciting opportunities. As I said, of course, subject to the regulations, etc., but you can go gambling in Grand Theft Auto or in Roblox. You can, as a user, even monetize your efforts and create avatars and things like this and make Robux, and then you can go and sell things, etc. Now, obviously, that is related to one more thing, which is crossplay. For many years, apparently, Sony didn't support crossplay play on PlayStation, but ultimately they did. And now it accounts for nearly half of Fortnite's revenue, for example. So I think this will spread out. There are great opportunities here. One other thing I wanted to mention also were live events within those games. I didn't know about these, but you could go to a concert of some DJ on a Fortnite or elsewhere, Of course, there were some attempts to do it within Oculus, with VR space, things like this. So yeah, obviously, most people say there's no substitute for live experience, and I think there isn't. But on the other hand, if you don't live in New York and you cannot afford to go to a great concert at Madison Square Garden, but you can afford the VR goggles, and you can take part in a concert there, why not? What are your thoughts on this, David? And have you seen any successful live events which were taking advantage of, let's say, the community aspects of gamers, and at the same time potentially VR or AR as well?
There's so many live platforms out there right now. Everyone's trying to build the next hop-in, building the next event where you can get a live action and success. And I think the one that I'm seeing a lot of interest from, especially in the fintech and investing world right now, is stonks.com. Really unique how they're taking this experience of investing and shopping live and putting it together with startups. So it's been really fascinating to make it feel like you're shopping for QVC type purchases, but you're investing in stocks and startups. So really unique. And I think there's other platforms doing it for gaming. One of them that I've participated in their previous round of financing is called Grin Gaming. And Grin Gaming is doing Web3 gaming. And what I love about Grin Gaming is you can have a moment where the question is, who's going to get the next headshot in Fortnite? Is it going to be Ninja or Lupo? Who's going to increase more in value this trading session? Shiba Inu coin or Dogecoin? And so it's very unique with these live real-time moments that you can bet on. So I find a lot of really interesting platforms emerging right now.
Yeah, so you can, especially in the US, you can also expand this to betting and things like this. This is not our focus today, but you can bet on anything, right? In some countries, it's a little bit more restrictive. But moving on, I also wanted to talk about XAI or Explainable AI. David is also a host of his own podcast, Humane, right? So a clear expert on AI. And the reason is that, maybe a few years ago, every fintech startup started their pitch with saying we are blockchain enabled. And then a couple of years ago, it has changed and it was AI enabled. And we talked about it in previous editions where the VCs can see through it. And they say, look, when we looked at the AI-powered startups in France, 40% of them had something to do with machine learning, but the rest did not at all. So we are talking about, first of all, overuse of the buzzword, but the second thing is when you are using something a little bit more advanced within AI, and you can use this in fintech as well, whether that's deep learning, neural networks, things like this, you start getting into a black box territory. So I think this is where XI or explainable AI comes in. So I let you, David, to explain it. What do people mean by XAI, and why do we need it?
At its finest, explainable AI or XAI means that for every input and output, there is a known direction. So if I, for example, am applying for a car refinancing, I have this car purchase I made, I want to refinance it, use a product out there like Moto Refi or another, and I get a decision. I'm approved or I'm not approved. I want to know, let's go under the hood with the algorithm that made the decision underwriting. Why was I approved or why was I not approved? And every factor and variable, you can trace it back to know specifically. The reason explainable AI or XAI has been emerging in the market is because a lot of researchers and consumers have been fed up to not know why a decision's being made. And XAI is uncovering that for businesses and consumers alike.
Great. I think, more transparency in the world, the better, right? Apparently, the ways to get there, in this case, is to document your models, be transparent about it, and then continuously work like this. So it's not like, okay, we do one version, we explain it to you, and then 3 versions down the line, this is something completely different. And I think it would help in AI adoption, right? And it's not a theoretical concept. I've seen an example from Unicre, one of the biggest reinsurers in the world. They developed an XAI approach at their company to look at the robustness of diversification resulting from their variety of portfolio allocation methods. So real life companies are thinking about it. This is not like a topic for discussion or a hate tweet or retweet topic. This is something which we should really take care of. Now, slight detour, but it reminds me also, David, of smart contracts and their need for them to be audited. So, of course, everybody says blockchain is immutable and things like that. And, for the foreseeable future, of course, it is. But when you're creating smart contracts, nowadays, the big four is having now new practices which do, for example, auditing of these smart contracts for you. Because if you, as a layperson, look at the smart contracts code, maybe you wouldn't know whether it really does what it's promising to do, right? So do you think that we could have similar services related to XAI as well?
I think in the data science and AI industry, we are evolving to a time where it's no longer going to be you need to hire a team of 30 ninja data scientists, AI specialists, and machine learning engineers to build up an entire process. I think just like in the blockchain industry, where we're having companies like Alchemy and others who are helping you build services, we're going to see the emergence of data science as a service, which means we're also going to see the emergence of explainable AI as a service. And I think that's going to be very helpful, especially for teams who don't have PhDs or postdocs and still want to build the best systems with the best governance.
Right. And do you see similarities with auditing of smart contracts, as I mentioned?
So when we think about smart contract auditing and explainable AI auditing, they're both audits, right? And the audit by definition means let's go under the hood and see what we can discover. The challenge is, I think today it's easier to audit smart contracts than it is to audit explainable AI. But when you audit a smart contract, I think we need to get very clear on what an audit means. And there's 2 types of audits that exist today. The first audit exists of I want to actually see where a transaction went from and to and how much gas was spent. And when we talk about smart contracts today, that is typically not the audits that are talked about. The audits that are talked about with smart contracts today are the security of these contracts. Are they actually designed to be foolproof, whether they're on a proof of stake or however they're organized to be secure? So I think the auditing is a little different. I think the explainable AI security can be part of it. There was a conference I went to a couple of years ago where there was a researcher from Microsoft who said that there is a way to actually hack the AI. And one of these cases with explainable AI was a system where you input NLP. You write some text into a system and you get an output, basically like an OpenAI GPT-3 system that always learns from the more text that you input. So if you start putting in a very interesting phrase like David Yakobovitch loves cheese and wine, David Yakobovitch loves cheese and wine, you just say it over and over and over again. And then you type some phrase out there, David Yakobovitch loves tennis, and then it outputs, and likes cheese and wine. It may or may not make sense, and it may or may be out of context. And that's the challenge we're seeing with the audit of how the data layer is being augmented and changed. The second augment, though, about the case of being approved or not approved of the loan, it's still very challenging depending on how the system's built. I think we're seeing a lot of extensibility today in both the PyTorch and TensorFlow ecosystems, where there are frameworks that are going to make explainable AI easier, but it's still the early days. I think we're still in the first inning.
All right, that's very helpful. Thank you. Now, let's move on to the crypto crash, unfortunately. If you're holding cryptocurrency, of course, there are ups and downs, or downs and ups, either way you look at it. Let's start with New York, though, because I was quite surprised. You have a new mayor, right, Eric, who announced that he would be converting his first three paychecks into Bitcoin and Ethereum using Coinbase. Now, of course, the Bitcoin has fallen last few days, a few weeks, and it's not clear how much he took in Bitcoin or Ethereum. Uh, what do you think about that, getting paid in Bitcoin or cryptocurrency? Is this a good idea or not? Some people say, look, Bitcoin is a digital gold. It's not a something that is useful for to be used as a currency. Ethereum is more now being used for the apps or the decentralized finance, even though it's losing share to other cheaper, maybe more efficient protocols as well. So what do you think about your mayor in New York getting paid in Bitcoin, even though apparently he cannot get paid by Bitcoin and or Ethereum directly, had to convert it himself?
First, I'm going to be one of the first people to publicly come out and say that I love Eric Adams, and I'm excited that he is the mayor of New York City. And I'm really excited what he's going to do to help not only build New York as the capital of the world, which it was for many years, right? Remember, New York used to be where the government was before it moved to Washington, D.C. via passageway from Philadelphia. To get New York to again be at the top of its game. I'm really excited for Eric Adams as our mayor. I met him a few years ago. We actually had him on the Humane podcast. We spoke to him during the
Oh,
pandemic
wow.
as New York was building its policies with COVID in Brooklyn, when he used to be the Brooklyn borough president, and previously was talking with him in this committee to advise on AI, currently when he was the Brooklyn borough president. And such a smart man, very humble, and a lot of great strategies. And his goal, from what I've discovered in knowing him, is he just wants to adopt technology. He's like, let's adopt it. Let's build a world-class city. Let's build the best technology. So is it going to be that Bitcoin will be the savior of all crypto? Maybe, maybe not. But I think he's in the right direction of saying we need to have newer payment processing, newer technologies, whether they're Web 2 or Web 3, that can enable more people to get paid, have better remittances, and open up accessibility to different workers, different knowledge workers, and technology workers. So New York is a cutting edge place for people to live in.
Right. Speaking of which, I know Miami has Miami Coin, or they try to have their own cryptocurrency, so to speak. Is there anything like this planned for New York?
I hope not. I hope not for sure.
Okay.
I don't think so
All
just
right.
yet. Yeah.
All right. Fair enough. So obviously, tough times for cryptocurrency market, even though, things can recover quickly. Um, I've done some research here. It's not an investment advice, anything like that, where basically the analysts are saying, look, it's all going down because of the macroeconomy, right? And as traditional investors have adopted more and more alternative assets, and this is one of those alternative assets, when things turn for worse in the markets in general, they get rid of the alternative assets first. So this is what's going on here. What is your take on this, David?
Well, my general take, and I shared this the other day with a couple of investors in the venture capital market, is it's too early to tell. That's actually my take. I don't think in either NASDAQ, S&P Dow territory or in crypto territory, we've seen enough movement to indicate a correction yet. But we've seen a lot of volatility. And historically, we've seen a lot of volatility in the January and February timeframe. So I think a lot of investors are keeping their eyes on what's happening with the market. And some investors are going towards liquidity, fairly so, to watch from the sidelines. And others are doubling down on their positions as the markets are going lower to potentially reap the rewards of a growing market. Now, nothing I'm sharing is financial advice, but this is what I'm hearing from some investors. So we're seeing both sides right now.
All right. I mean, there's some investors also sharing their views on Forbes magazine and elsewhere, saying that, look, it depends what you define as a crash, right? In a crypto space, if it's if it's 25% drop, maybe that's not even a crash. Apparently, though, since its launch in 2009, the Bitcoin has fallen by more than 50%, 8 times. So let's see. Now that, of course, impacts the other companies that are trading with cryptocurrencies like Coinbase, and its share price has plunged as well. Even though they are going to diversify, they're launching an NFT marketplace, which should be great. But it is challenging for these couple of days. But let's see. I mean, of course, in some countries there's been also bans on mining. First, that happened in China. Now in Russia, that's also a disruption, right, to the pricing.
Yeah, I think I'll reiterate that. I think it's too early to tell. We've definitely seen just in the last, I think, 48 hours that Bitcoin's gone back up 25%. So we have to see. It's going to be early to tell how much of this is signal versus.
Right. But on that point, that we are not discussing investment advice here, be careful out there. See, what is your appetite for risk? Just like if you go to your advisor, they talk about where you are in life, what are your obligations, and they say, well, you should put so much in fixed income, so much in equities, so much in alternative assets. So probably it wouldn't be a good idea to put everything in one place. It's never a good idea anyway. But apparently in the US, some of the companies like crypto.com are using celebrities to promote investing in crypto. And apparently, they ran an ad with Matt Damon, and it looks like they are planning to add another one during the Super Bowl. So I guess they are the optimist, but for you trying to invest your hard-earned money, let's be careful, I would say.
Yeah, I've never been a fan of using celebrities to advertise products like crypto. It kind of makes me think of the influencers on Instagram who say, buy this face mask or buy this energy.
I mean, if they're using that face mask, maybe, right? But it happened before as well, where a lot of celebrities were endorsing all kinds of other things, like when there was the first ICO wave, right? The initial coin offerings. And there were people who had nothing to do with finance, nothing, they didn't invest their own money. So it seems it's kind of unfair to ask somebody to pay up and spend their investments, and they don't, or they are not an authority on that topic, and there is no real process behind it. So it's I would have thought there would be a little bit stricter consumer protection there, but maybe there will be, hopefully not too late for a lot of people. Now, let's move on to maybe one other downer, depends how you look at it. Of course, if you are able and willing to short stocks, not that I recommend to do it or anything like that. There are some companies who took, their share prices took a nosedive during the pandemic. Some are because, of course, their business was disrupted. People couldn't go and shop in retail stores or couldn't go to events or etc. They changed to completely digital virtual experiences. But there are some that are digital first and highly innovative companies, but if you bought the shares or stock in them, you probably would have been disappointed, like Lemonade. Lemonade, very famous InsurTech that promised or still promising to revolutionize how you go about insurance, not only in the US or their home country Israel, but all around European market as well. Going to different markets. They also bought their competitor Metromil. Same thing for both of them. Their share price has tanked I think I know what the people are saying why that happened, but I'd like to hear from you, David, as well. Do you think, again, this has been already a year and a half, for example, of continuous, decrease in the share price? What should you do here with the companies like Lemonade and other InsurTech companies that are using the best technology that is there, and they're supposed to be much better than your traditional insurers, whether that's we talking about car insurance or anything else, but some of them, even their loss ratios is worse than the incumbents, or it's increasing. How is that possible?
I'm a big fan of Israel-founded startups, and Lemonade is one of those startups that was founded between Tel Aviv and New York City. So first, big fan of the product. Previously used the product as well. Had great experience actually with my insurance with them until I had a claim. So one thing I discovered in the process is that Lemonade is not an actual insurance company. They are a broker and they work with third party. And so they predominantly, they manage these margins by not owning anything in the business. And that's what happens. And you start to look at some of the reviews for Lemonade on the Better Business Bureau and other platforms, and they have these horrific reviews. I mean, you don't see any of these reviews with State Farm, Allstate, or any of the big companies. And it's because they've decided we're going to be a tech platform, but we're not going to be an insurance company. So they have a really good marketing arm, but a very poor and deceptive insurance company. So, for me, my experience is I no longer use Lemonade. So, I may not be the only one in that boat. Great marketing, not so great product. And, I think they can improve. And I think that's the challenge. If you're going to build an insurance tech company, you need to build a company that is insurance and tech, not just tech, because otherwise you're going to get beaten in the market, which is what we're seeing with Lemonade now. And soon later, customers are no longer going to have loyalty to your product.
So it sounds like the front end is nice and sleek, but because they're a broker that depends on the outdated infrastructure of the incumbents in the background, they cannot back it up when something bad happens, right? Is that what you're saying?
Yeah, it's like imagine you were to go to the Met Gala in New York City, and you find this amazing people dressed up in beautiful dresses and makeup and hair and everything, and then the sprinklers go off. And then when the sprinklers go off, all the makeup comes down, the dresses, you realize they're just like from Goodwill, they're trash, and you realize that there really was nothing there in the first place. It was all just facade and mirrors. That's what we're kind of seeing with some of these tech companies today. Not saying that that is everything that's Lemonade, but that is part of the truth because they don't own any of the insurance operations.
Right. I think this is a great explanation. I mean, I've also seen some entrepreneurs or investors saying that, look, they rushed to go public too quickly, that the founders were interested in an exit a little bit more than in building their company. It depends that they wanted to take advantage of the great markets that we had because of the pandemic support and things like that. But they should have waited, like Uber, that went public after 10 years, or others. I think people can have different views on this. In the good old days, maybe people didn't take 10 years to go for an IPO. Maybe in Lemonade's case, this was a little bit too early. Who knows? But I think your explanation is actually right on the money, and this is really the issue where a lot of the incumbents, sometimes they don't work with the fintechs, but they develop a digital front end, and the back end is still the same as before. So very nice with onboarding, but when you really want something of substance, then good luck to you, right? So you can also have a lot of B2B fintechs that are working with the big incumbents, and I think very often they say, look, we don't have an ambition to revamp your entire IT infrastructure, the old bank, but we have these nice APIs. We just plug it into your old infrastructure, and everything will be great. But I would be quite cautious of that, right? Because the end-to-end has to work nicely, not just the front end. And then what are you going to do if that infrastructure just keeps being, pushed back in terms of upgrade and technological debt grows, right? So maybe one last point on this. Everybody's talking about let's just use APIs, plug it into whatever octopus of outdated infrastructure you have, and that's fine. Do you think that maybe everyone should be a little bit more ambitious and try to go for a bit of a deeper transformation of the incumbents?
I think so. I think when you build a company, the goal is to take new technology and apply it to existing or new business models and to build something that is generational. And to do that, look, you can't transform everything in the beginning, right? So when you build, you have to pick your niche where you're going to focus down and transform that part of the business and then continue to expand with the transformation. I think the goal in any business, though, is making sure that you are constantly innovating, that you don't stop one day and say, oh, we're done with innovation. If you stop innovating, guess what? You are no longer a startup. The definition of a startup is a company that is using technology and businesses to innovate and disrupt markets. And so, when a company goes public, they could still innovate, but they're no longer.
Right. Whether they're still a startup or not, I think they should always innovate. But of course, the reality bites when you're a listed company and you need to produce consistent results. So you become a little bit more risk averse. But in any case, that's another discussion we actually had on the podcast as well with Financial Services Capital, a private equity firm in Europe that has a thesis that, look, the bank's IT infrastructures is often very outdated. Unlike in the US, where there was a lot of consolidation among the banks, Europe, because post-financial crisis, the regulators wanted to build their own home champions. There was not much, or if any, cross-border M&A activity. All the banks are going through rationalization on their own, and they don't invest sufficiently in IT infrastructure. At the same time, they are listed, so they cannot afford a big transformational exercises. So the thesis of that firm is that, look, you should take these banks private, and then you can do a much more radical revamp of the IT infrastructure. So maybe one last comment from your side on this. What do you think? Is there an advantage for a bank to be privately held if they want to revamp their IT infrastructure, or it's not a visible advantage versus a listed?
There's quite a few credit unions we're seeing out today that have incredible technology, building mobile applications, building all the technology to make them on par for what you would see from the big players like Wells Fargo and TD Ameritrade and HSBC. Do you need to be listed publicly or not to do that? I don't think so, because technology is behind the scenes. It's the infrastructure. So whether you're in the public markets or not, that won't make as much of an impact to be public. Public is really about raising another round of capital and then having just different stakeholders. When you're a private company, you could have investors, and those investors sway the board and your executives on how to grow and define the business in technology. The same thing happens when you're public. You just have different stakeholders and a different fiduciary responsibility that you owe towards. So if being public helps you accelerate that market adoption and the financing to build that technology and awareness, then go for it. But otherwise, we're seeing companies like Dell and others that have gone private again because they're saying we don't need all that spotlight. We can get it done in the private.
Yeah, exactly. So that's what I meant. Maybe you are under pressure from short-term perspectives of some of your investors. On the other hand, it may give you, of course, access to another pool of investors. So it depends on a case by case. But let's see how that develops, how that debate on modernization of banking develops around the world. What we talked about today was gaming and fintech or metaverse, trying to see how you can create marketplaces, monetization strategies within gaming space. What does that mean? Big tech companies buying games publishers in terms of the market as well. We talked about explainable AI or XAI. Why is it needed and what it means? Why is it not a good idea to rely on a black box, especially as we move on from simpler to more and more complicated AI models? We talked about the recent crypto prices developments. See how that develops. Keep patient. Keep being patient if you if you have invested in the markets. Watch out for everybody's obviously having a different agenda when they comment on this. This is not necessarily a mature market yet, of course. As we mentioned, this is part of the alternatives and the alternatives of the alternatives, right? And then lastly, we talked about the question marks around InsurTech revolution, right? A lot of the promises that were made by InsurTech companies, sometimes their investors haven't seen fulfilled yet, but hopefully the jury is still out there. So we'll see how that develops as well. So I think for the focus of this month has been quite exciting on balance, positive developments in gaming, metaverse, of course, in AI all the time, crypto, as we know, going up and down, and InsurTech, unfortunately, a little bit of a downer right now, but hopefully with the advice of David that you have given some of them, hopefully the things will turn around for them as well.
Like any market, right? There will always be ups and downs, but always think about the long term. That's what I think is one of the best advice that I've heard, and why I still look up to the great sage of Omaha, Warren Buffett, right? Look at it for the long term. Look for those value-add businesses. And you can't go wrong if you look at it. Where will things be in, let's say, 5, 10, 20?
Exactly. So long-term investing, think about that, be patient, and listen to the Voice of FinTech. You can listen to the recording of this it's still probably this week. And I'll put the notes to some of the press articles and the research that we mentioned here. And thank you very much for joining another session on Fishbowl. Thank you for listening to Voice of FinTech podcast. If you haven't already, check out also voiceoffintech.com, where you will find all the episodes and additional resources related to the podcast. You can also subscribe to Voice of FinTech on Apple Podcasts, Spotify, Google, or any other podcast app that you like. If you have any suggestions on the topics or guests, or how to make this podcast better for you, please email us at info@voiceoffintech.com. Happy to hear from you. Thank you.